Good morning, ladies and gentlemen. Welcome back to another pre-market watch list here today. Let me turn that down. And awesome. So thank you guys once again for tuning in. Hopefully today is another really good trading day. All right. So interestingly, today is starting off similar to how yesterday had started off. All right, so yesterday had kind of started off a little bit slower pre-market. Good morning. Thanks, Eric. Appreciate it, my man. So yesterday started off a little interestingly. I don't know if I remember saying it yesterday, but like yesterday just didn't seem like there was a whole lot that was in play. There were a few things, but not a ton. And then it ended up being a crazy good day. And again, that's kind of how today is starting off. To me, it didn't look like, or still doesn't, really look like there's a whole lot. Really, there's only like 2 stocks that I'm really focusing on today, and that's it, which is okay. Which is funny because I find that on the days that I think there's nothing good to trade, those end up usually being my best days. Ironically, I don't know why, but the days where I really don't find a whole lot that looks good, those tend to be my better days. So I don't know if that means I'm just staying more focused on one stock over trying to view a bunch of them. Who knows? But it's interesting. So we will cover a few stocks that aren't on the headline of this video, but we'll get going on it. So with no further ado, let's get into it. One second, I'll share the screen. All right, here we are. So, I'll just touch on this stock right now since we're already here. It's CarMax. CarMax had their earnings today, and as you can see, the stock has gone from $70 to $77. The only issue with this stock currently is that it trades on pretty light volume. It's obviously picked up in volume here a little bit pre-market, but so far it really doesn't normally trade on that much volume, so it makes me a little nervous about actually trading it. So we'll see. Currently, CarMax has a 52-week high at $77 and almost $78. And right now, we're basically at $78. So technically speaking, in stock trading terms, we're right now at resistance. So it's very possible we'll start seeing CarMax pull back from here. So what I'll probably do is I'm probably going to honestly look to short CarMax today. If I do trade it, it will most likely be short bias out of the gate, anticipating a pullback and then possibly a long play. So for me, I would, for the most part, just watch CarMax potentially short off this 78 level. If it doesn't break through this level right here, 78. If it can't break that, then I would just look to short it from there down. All right, so that's my game plan. 78 fail, and I get short. All right, on to the next one, which is RHT. So RHT is kind of the main focus for me today. It's a bit higher priced. It's $141 a share, but it also looks really good. So RHT, Red Hat was an earnings play after hours. They gapped down from $165 a share and now currently sits at $141 a share. Usually I would look to short this, okay? But the yearly chart also has its 200 moving average right there. And if you go straight across, you'll see that that's right at about 140 or right at about 141, 142. So currently the price action, this is what it looks like on our RHT. This is exactly what we're looking at. The price has literally done this. It has gone from here all the way down to there. That's what that looks like. If there was a daily chart for the gap down on RHT, that's what it would look like. Well, actually, that's wrong. It wouldn't look like that. It actually looked like this. That's what the price right now on RHT looks like. That's how big the gap down is, which is freaking huge. The only issue I have with trying to actually short, the only issue I have with trying to actually short RHT is the fact that it looks like this. This is really what the stock looks like, though it hasn't actually plotted it yet because the day hasn't really started or the market hasn't opened. But that's what it really looks like. And it's hard for me to try and short this when I know it's such a big red candle and it's right down on the 200 moving average. So if I do end up shorting RHT today, it has to be on a break below 140. If it doesn't break $1 or $140, I'm most likely not going to be shorting it, in which case I will most likely end up taking it long in the hopes that it ends up squeezing up a little bit. Okay, so for me, I will be watching RHT first initially short, and then I'll be watching it long. All right. So there is RHT. GEVO, I'll briefly talk about GEVO. Not that I actually like GEVO. So I don't really like GEVO, but the reason I'm going to mention it is because, drum roll, I don't know if anybody knows, but GEVO has been getting short sold like crazy for the past 2 days, 3 days. So for the past 3 days, let me clear all this stuff off. For the past 3 days, good morning, Tiny Trader. Good morning, everybody. The drawing tools I have on my chart are not from Thinkorswim. They're through my streaming software for our private group. So if you'd like to get the drawing tools that I have on my screen, you would have to download Zoom. But you wouldn't want to do that because that means you'd be streaming your computer every time you're trading. And if you don't have a reason to be streaming other than using the drawing tools, then it is of really no value to you. So you don't really want them. But again, if you really want them, you'd have to download Zoom, ZOOM. So anyways, as you can see here, GEVO hit a high of $24 and then it boom dropped, and then it started here and decided it just wanted to take the day off, so it dropped again, and then yesterday it dropped some more. Okay, so what's happening here? Short, 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 and then this might even drop again, which that would then be a short. But considering all this is short, 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 what we may in fact see happen is something like this. And that, my friends, that green line I just drew right there is what we're going to call a short squeeze. Okay. So considering it was $24 and the thing has gone from $24 all the way down to a low of $7 within 3 days. So you're trying to tell me the stock has lost, so that's 13, 17, almost $18 a share. Almost $18 a share in 3 days. That means there's a lot of people shorting the stock, which means it runs a strong chance of having a short squeeze, which I would then be watching for today. If GEVO does not head lower today and it starts trickling back up, there is a strong chance we're going to see a short squeeze. So with that being said, I will be watching GEVO today, and if it cannot break down below this $7 area, or sorry, $8, or kind of holds up and it starts trickling back up, I'll be watching GEVO for a short squeeze. Similar to LFIN, yes, kind of. But yes, we'll be watching GEVO for a potential short squeeze today. And then the last one, what was the last one? ABIL. So we'll talk about ABIL. So ABIL is just basically, it moved from $2 yesterday all the way to a high of $6 this morning. If you look at the daily chart, it has it is above its 200 moving average. So this line right here, those yellow lines or yellow dots, that's the 200 moving average, which is also resistance. And currently the price is above all those yellow little arrows I drew and the purple line on my chart. So that means it is blown through its moving average resistance, thus meaning your next resistance point would be right here. So you have resistance at $7.74, and then after that you'll have it at $9.32. Then after that will be $10.12. After that would be $12.06. Then it'd be like almost $13, et cetera, et cetera, et cetera. Anywho, ABIL has been moving up and up and up and up and up from yesterday to today. There is no news. It has no catalyst. There is no reason for the stock to be moving up this big. So what's that mean? It means more likely than not, you're going to see the stock ABIL dump out today. I would be more, the chances of it going up are less likely than it coming down, considering there's no reason for it to be up this high. So there's a strong chance you're going to see profit taking on the stock as soon as the bell opens, which would then most likely cause the stock to crash. Okay. All right. With that being said, let's see. I'm reading some comments here. 1 second. I do not trade aftermarket. Actually, I'll cover that real quick. Hold on, guys. We're going to take a step back. Rick J's been asking me this question for a couple days now. So real quick, we're going to take a pause. So everybody who wants to learn about stocks, open up your ears. So today on this YouTube stream, I will show you guys how to purchase a stock on Thinkorswim during pre-market trading. All right. And I will do that for you. I don't know what I'm going to do it on, but I'll just do it. We'll do RHT. Here we go. I'll do a live trade pre-market so you guys can see it here. All right. So if you want to trade any ticker, any stock pre-market, you must, well, hold on. Let me do something here before I do that. 1 second. Let me pull up something here. Is that over there? Over there. Okay, cool. So if you want to buy any stock pre-market, you need to go to the handy dandy trade tab right there. The thing I'm circling, yeah, that thing. That tab is where you need to go. You need to go to the trade tab. Once you enter the trade tab, you will then come to this little handy dandy search bar right there. You will then type the ticker you want to trade, and in this case, it is RHT. Now we have pulled up RHT. So in order to purchase the stock pre-market, what you will then need to do is you will have to come over here to the bid or the ask. Once you click that, it will bring up an order window, which is right here, where you can then adjust the amount of shares you want to purchase or decrease the amount of shares you would like to purchase. Okay. No matter what, if you're purchasing in pre-market trading hours, you must use a limit order. You must be using a limit order during your pre-market trading session, or else the order will not go through. Secondly, so you must first use a limit order. More importantly, you'll have to change over this tab right here where it says day. If you want to place a trade in aftermarket trading or pre-market trading, instead of it saying day, it must be clicked to GTC EXT. Again, you must click GTCEXT. All right. And that's how you're going to be able to purchase the shares. Now, I will take this trade and I'll just purchase 50 shares for the hell of it. Sure, I'll just send that through. So I just put in an order for RHT. Let me go back to the chart now. 1 second. So to go back to the chart, you can now see over here, I now currently have 50 shares of RHT and I'm up $3 on the position. Woohoo. So that is exactly how you purchase a stock pre-market on Thinkorswim. It's through the trade tab. It has to be a limit order and you have to change your parameters to GTCEXT. Daniel, you short a stock on TOS by clicking the sell button. So when you go to buy a stock, typically you'll hit the buy button, but instead of hitting buy, you just hit sell. And that will sell and that will short the stock. All right. So anywho, I don't really want to, I mean, I guess I could hold those. I don't know. I don't necessarily want to hold 50 shares, but I guess it's only 50 shares, so why not? I'll hold it, see what it does. Yay, I'm up $12. All right, cool. So I'll just manage that from another window. Give me a second. So if I want to sell it, I can do that. All right, cool. So we'll continue on. So now you guys know how to do that. IQ, I do want to talk about IQ. So I will be watching IQ today. Why will I be watching IQ? The reason I'll watch IQ is because it's dropped down. It had a massive pullback yesterday. There was a ton of people shorting it. So today I will also be watching IQ for a long bias trade. If it can break over $39, right in this $39 area, that should be a good spot for a short squeeze. So I'll be watching more specifically. If IQ can get over the $40 area, there might be a very big short squeeze. So I'll be watching IQ long today. It's on its daily chart. It's right down to its 9 moving average. So it's on support, and I'll be looking for a little bit of a squeeze or a long bias trade on IQ today. All right. Fisher, Fisher G, to answer your question, how do you do multiple windows of charts? And well, for one, if you have more than one computer, you could run multiple charts. You could also go up here to the upper right-hand corner where you see these boxes, and you can click that, and that'll allow you to increase the amount of charts you're looking at at a given time. And that's what you're talking about. I mean, yes and no. I would cut my losses on IQ if it starts breaking down below like its previous low. I mean, you've already held through the worst of yesterday, so I would just hold it until it breaks down below 37.73, but yeah. Yeah, or you can use the detach button. Joe, honestly, that is my fault. Haven't been sending them out as regularly as I used to, so don't worry, I'll start getting those out again. Okay, sorry about that. All right, guys. So we're not going to look at any more stocks, but I will answer some of these questions. So yeah, IQ. So to answer IQ again, IQ has a lot of room that it can come down. regardless of the amount of room it could come down, it has bounced on its 9 moving average support levels. So I will be watching IQ today for a possible bounce or a short squeeze. And that would only be, and if it only can get over $40. If it does not break $40, then I'll be watching IQ short bias. All right. It's been coming down for a couple days. Actually, looking at this 5-day chart, yeah, you know what? We might have a choppy day on our hands. It's hard to tell, but we might see a little bit of a choppy day looking at IQ from this chart. But at the end of the day, it to me, it's okay because I can trade both long and short. KR? Yeah, HUYA moves very similar to IQ. No, I have no shares to short on on GEVO, so I'm not even shorting it. Karan, I just answered your question in our private group. If you look at the Swing Alerts channel, our trader Brandon sends out video watch list of his swing trades. No, you can swing trade on I'm not limited to the amount of times I can trade on TOS. Yeah, absolutely. GEVO is a bad company, without a doubt. It's a penny stock that flew up, and now it's back down to $7. I said we'd probably trade all the way back down to $3 when it was at $24, and well, a lot of people didn't believe me as usual, but that's okay. That's okay. But yeah, Fisher, do look for GEVO to have a green day based from short sellers covering up their position. Okay, so let me actually get out of the screen share so you guys can see my face. So yeah, so GEVO, it's typical mega runner penny stock. It started with the gap up. Everybody shorted it. Then all those shorts got killed because they got short squeezed. And then it started momentum trading. And then it hit everybody's scanners. And then it really flew up. And then, of course, now it's back down to $7. So this is a typical, guys, this, hold on. Good stuff. This is the typical penny stock process. Listen very closely because, quite honestly, Timothy Sykes, Ross Cameron, and no other stock trading person I've ever seen has ever taught this. Or if they do, they're probably charge you about $6,000 for it, but you're about to learn it for free. All right. So penny stocks have a process they go through. Okay. I won't give you all of the details because that would take too long, but there is a penny stock process. Okay. And it usually goes through about 5 steps. Okay. So first thing, a penny stock will start gapping up, usually based on news. GEVO had news. Secondly, it will go through a massive run, which means it flies all the way up to maybe $24 like GEVO did that same day. So this is what happens. The stock gaps up. It has news. It runs like crazy up to $24. In that same day that it runs up, it will end up crashing. Okay. The next day, that penny stock will bounce and it will squeeze all the way up to the previous day's high, where short sellers will then hammer it back down again. So it goes like this: back up, hits its high, crashes the same day. It will then squeeze back up to retest the previous day's high, in which it will then fail again. More short sellers will pile it in. The short sellers will take over for the next 3 to 4 days. Then once that stock flatlines or sidelines, all the short sellers will then cover up, which then causes a squeeze. So there's about a 5-step process. And you know what? I will map it on my screen real fast for you. Hold on. So again, this is something that most people will never teach you. Okay. Here it is. Ready? Oh, hold on. I gotta. This is close enough. So this is. Oh, I need to go back to this 5-day chart. So this would be my last little mini lesson, and then I gotta get out of here. So 1 is down here. So this is 1. Okay. This is 2, 3, 4, and then 5. 5 is the flat line, which means 5 is going to probably start the squeeze. Oh, I'm not sharing screen. I apologize. Here we go. Here we are. Here you go. So that's 1, 2, 3, 4, 5. Okay. 1, 2, 3, 4, 5. This is almost guaranteed the steps that all penny stocks will go through. Okay. Right there. 1, 2, 3, 4, 5. There's usually about a 5-step process for all big, good trading penny stocks. Okay. Let me map it off one more time. 1 will be news and the stock gaps up. 2 will be the monster mega runner where it then crashes before the end of the day. 3 will be the short squeeze on the following day where it tries to break through the previous high. And then 4 will be the first red day. And then 5 will be the flat line. And then 5 usually signals that the stock is running out of steam down and we're going to squeeze. Alrighty. Anywho. Let me get back to my thing here. So. Oh my goodness. So anywho, sorry about not sharing the screen there, peeps. Hello. So sorry about not sharing the screen there. It was my fault. You know, I'm just not perfect. And I also suck at my job every once in a while. Everybody has their days where they suck. Anywho, so you know, that's still not enough to fully teach you it. Again, that stuff we teach in the course. Of course, we do save some of the secret stuff for our premium members because that's the right thing to do. The only difference is our premium member and premium chat room, we don't charge someone $6,000. Timothy Sykes. Excuse me. Coughing there. Or 5,000. Ross Cameron. Sorry. Excuse me. So we just don't charge everyone an arm and a leg to learn it, right? That's the only difference. So anyways, remember that penny stocks that are good penny stocks have a 5-step process. 1, it starts with news and there's a catalyst. And then 2 will be the mega boom and also the crash. 3 is like the next day it tries to break through the previous day's high. 4 will be the first red day short. And then 5 is when the stock flatlines and starts squeezing up. Other than that, anyways, that's all I got for you guys today. I got to head back to the private group. I'll see you guys not tomorrow because today is Friday. So maybe there'll be a recap trade today and then there are going to be some videos over the weekend. Who knows? But I'll see you guys all by next week. All right, guys, take care and see you later.